Hi there. Can you get another increase of 800% in the stock price of D-Wave? And the answer is yes. And I'll show you how you can do it. You can see that the stock price was very volatile in the past, ups and downs. And the market cap right now is about 1 billion. And if you want to take advantage of this company or the entire industry, quantum computing, you have to understand it first, how it works. What's the baseline? If you look at D-Wave especially, you can see that they have partnerships and contracts with different companies from Japan, for instance, a mobile phone operator, NTT, another company, Japan Tobacco, and other partnerships with different researchers. And they keep improving their technology. Now, you have to understand that quantum computing is in the early stages. If you look at the other companies, you can see here, for instance, the quantum computing industry is in its early stage and volatile. This is an important fact, volatile. Because of this volatility, you can take advantage of the stock price. And of course, if this industry does not develop, or it develops more slowly than expected, the growth of their businesses will be harmed. So also your investment, the return on your investment will be low. Now this information is from their annual report from Rigedi. If you read about the other companies, IonQ and also D-Wave, you'll find the same thing in the risk section. But now let's also look at the other people, what they are saying. For instance, the CEO of Nvidia, Jensen Huang, estimates that quantum computing is still 20 years away. Yet, its company is investing in quantum technologies. And if you look at the job postings, those are roles in quantum error correction and algorithm engineering. This is another fact that they are trying to improve this technology. Because as you know, there is a problem with quantum computing. Error correction especially. Now, this is the view of Jensen Huang, the CEO of Nvidia. You can also look at Mark Zuckerberg, which backs Nvidia CEO. He says it's still quite a ways off. So, those two CEOs know a lot about the IT industry, the technology industry. And you can rely on their view, especially when they are saying that quantum computing is 20 years away. Now, despite those views, you can still take advantage of the stock price of D-Wave. And here is how. You never buy this company when it's on the wave, especially at the highest peak. You never do that. For instance, back in December, the stock price was about $10. So the market cap was doubled, 2 billion. And now it's about 1 billion. And if you compare the market cap of 1 billion with their fundamentals, here, it doesn't make sense. The revenue for the last 9 months was about $6.5 million. And their losses over 56 million. So it doesn't make sense at all to invest when the revenue is about 6 million, maybe may reach 10 million, and the market cap is only 1 billion. And especially quantum technology is far away to be developed, 10 to 20 years. It doesn't make sense to invest at this level. But when the stock price goes to $1 or 40 cents, here you have one here, 48 cents, 82 cents, $1. And if you look at the return from that level, you can see 300% up, 200%, and over 800%. Now imagine if the stock price goes from $5 to $1, that means the market cap will be divided by 5, right? That means the market cap may be around 200 million and then you compare 200 million with the revenue of about 10 million, and then that will make sense. Your investment based on future growth will make sense. But right now, it doesn't make sense at all. So if you want to have another 8x in the stock price, or 2x, or 3x, don't buy at the highest peak. Buy at the lowest bottom. And compare the market cap with the revenue. If the price to sales is over 50% or 30%, then that's not a great buy. Buy when the market cap reaches 200 million or less than that, or 300 million, around that level. And then you can have another increase like this, 200%, 300%, or 800%. But be aware, this won't happen every year. You have to understand that this company has good tailwinds from quantum computing. As those two CEOs are saying that quantum is far away 10 to 20 years, for sure the trend will reverse. You will have years when the stock price will go up because they discovered new ideas, they improved their technologies, and years when the stock price will be flat, something like this, or it will go down. You have to understand this and don't buy at the highest peak, because if you buy here, this technology, quantum computing, is not yet fully developed. You have to understand this. But if you buy low and take advantage of the trend, the tailwinds from this industry, quantum computing, then you might see an increase like this, 100% or 800% or even more than that. But this is the upside, as I said. Buy low and you can have more than 3x or 5x on your investment. But you also have to be aware of the risk. Don't put all your money in this company. Because if you look at their fundamentals, just look at the revenue. 6.5 million for the last 9 months. Let's say they are making 10 million a year for 2024. And then you look at their losses, operating losses here. Close to 60 million. Keep in mind this number, 60 million, right? As they have so much losses, they also need more money to fund their operations. And if you look at their balance sheet, you can see that their cash position is about 30 million. And they still have 60 million in losses. And this is not all. If you look at their debt, current debt, 14 million here. And long-term debt, 42 million. So it's like their cash position is out. And they still have a loss over or close to 60 million here. And to survive, to continue the research, because it requires about 25 or 40 million a year, plus general administrative expenses, another 24 million, they'll need more money. And to raise more money, they can issue more shares when the stock price is quite high, the highest level, or gain more contracts from the government. The problem is, the first way to issue more money from investors is that they will continue to issue more shares. And if they do that, you'll face dilution. You have to be aware of this risk. And the second way to raise money is to take on more debt, or you have to ask the question, who are their customers? Because those customers will pay the research to continue forward. And as you can see, most of their customers are from government and research customers. So the revenue, most of the revenue for this industry, quantum computing, comes from government and research customers, research labs. And once you understand this, that they are in the early stages and they depend on the government and other research labs, you will pay more attention to the valuation, the market cap, and also the risk. So as I said, if you buy low, you look at the revenue and assess the stock price, the market cap at that moment, because the market cap may be different if they keep issuing more shares. You also have to look at all the fundamentals. And you assess if it makes sense, the market cap with the revenue, then you can take advantage and buy this company, and maybe in the next 5 years, you will have another return in this trend, quantum computing, to have an upside like this, 700%. But be aware of the risk. As I said, this company may go bankrupt anytime if they lose their customers and they already have a lot of debt and almost zero cash if you subtract their cash from their debt. So, be very careful. You might make some money. Don't go all in, just a small portion of your portfolio. Take advantage of this industry, quantum computing. And by the way, you can also be more diversified. Maybe you don't like D-Wave, quantum. You also like RJD, IonQ, and other companies. This is an ETF for quantum computing. So it's up to you how you want to invest and take advantage of the low prices. And if you have other questions, please let me know in the comments.